Santolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning as usual on September 12th. So it's been a pretty good week for the market. The indexes have kind of just grinded higher here a bunch of days in a row, as you can see here on the chart with the NASDAQ, but we've just been grinding higher. Most of the top-down evidence remains positive. I would say it's positive, not powerful, but still, the trends of the market, the broad market, defensive stocks are just kind of sitting there, so most of the evidence is positive. And I'll also say this week we did see some more growth and what I'll say growthy areas, some, bull market stocks, stuff like that, perk up, show some strength, okay? And there's no question that there's some stocks that are doing very, very well. That said, there's still a lot of the chop factor out there, meaning, first of all, there's a lot of sectors like software and cybersecurity and growth-oriented retail that are doing nothing. And then there's a lot of stocks that, they'll gap up on earnings. And then they'll pull back and sit around for 2, 3, 4 weeks. And then they get going for a week. And then they pull back. And then they start, it's just kind of, overall, if you're just kind of held, it's like, okay, it's pretty good. But on a week-to-week, day-to-day basis, it's very choppy and there's rotation and re-rotation and stuff like that. Doesn't mean there's not money to be made. But I would just say it's not the type of environment like, May or early June where it's like just buy, everything's going up. It's definitely about buy points, what stocks you buy, obviously, but entry points, portfolio management, partial profits, raising your stops, all those position sizing, all those sorts of things matter a lot in this environment. If you're just kind of plowing into this stock and that stock, you're probably getting whipped around pretty good, okay? Doesn't mean, the odds favor higher prices down the road, but it's just in terms of individual stocks, it's just a little bit tricky right now, okay? In terms of just going forward in the near term, we have the Fed next week. We have seasonal factors. I'm not a big seasonal guy at all. I don't invest on that, but late September, early October, not usually the best time for the market. It can be, but, we have had an extended intermediate term run here. So there are, like I said, there's a lot of cross currents. That's why a lot of names are hitting air pockets. Money's kind of sloshing back and forth. But overall, most things are good. Most of the evidence is positive. So I would be, in general, mostly bullish, depending on, what area of the market you're attacking. And Cabot Growth Investors Model Portfolio, obviously with a focus on growth stocks, a lot of that area outside of AI infrastructure has been, like I said, kind of stagnant. We did a little buying this week. We're 40 to 45% cash. We'll see how it goes. We had 2 stocks in the portfolio, and we still do, that we wanted to average up on. They looked like they were ready to go, or they changed character for the better. And then a couple days later, it's kind of like, well, maybe not, because they're pulling right back. So not that they're broken or anything, but it's that type of environment. So we see a lot of names out there, like I have for a while, that we could put a decent chunk of money to work relatively quickly if things kind of come under more control, as opposed to just up down. But we have to see that happen first before we do it, okay? Anyway, let's hop into the charts as usual. I'm using a program called Market Surge. You can learn more at marketsurge.com. It's a product of Investors Business Daily. No real change with the major indexes. Here's the NASDAQ, just kind of gliding higher. Like I said, it's been, we've had these 3 shakeouts, I guess, whatever you want to call them. In the major indexes in the market. We've had some more in growth stocks, the rotation. But 3 kind of, call it, 3 to 4% or 5, maybe one got to 5% dips here. And now we're kind of levitating higher, clearly above, held the 50-day line, still in an uptrend. Maybe we have sort of a mini blow off here and then we have a correction. Who knows what happens. But right now the trend is up. Okay, S&P 500, same sort of thing. Here's your 3 shakeouts since mid-July, which on this chart don't look that much, but when you're living through them, especially with individual stocks, a little bit hairier, but continue to, grind higher. We are, this was the kickoff point in late April. So we're getting on toward 5 months, right? Yeah, April to September. We're getting on toward 5 months without any quote unquote real correction. So it doesn't mean it can't go 6, 7, 8, 9 months. I'm not telling you it's gonna happen next week, but just keep an eye on it, that we're a little extended here time-wise. Maybe it's another short-term shakeout, maybe it's a sideways period, but we'll see how things play out. The broad market remains fine, but again, it's kind of subject to this. This is small caps, IJR. And again, you're just kind of like down here, up, down, up. It depends on what does the Fed say next week? What's the economic report? It's very news driven, okay? Overall, not a lot of progress here over the past, 3 weeks, but still clearly, above the 50-day line, looking good, okay? MDY, mid caps, same sort of action, New York Composite, just to run through them, okay? So positive on the intermediate term trend. We'll see how it plays out. We're not early in the intermediate term trend. That's what I think is safe to say. Doesn't mean we're late either. We'll just have to see how it plays out. This week was better for, growth. I guess the Momentum Fund, this is MTUM, which to be clear is not necessarily growth. It's, like JP Morgan's a big holding, stuff like that. But it's stocks that have been outperforming, You're going to see back here, this was relative to the S&P 500, this blue line. The Momentum Fund topped out here in basically the beginning of June. Doesn't mean it hasn't gone up, of course, but it's just been underperforming. And it's been kind of grinding sideways. This week, though, you can see we did lift, pulling back a little bit here. So we'll see how that goes. The IPO fund, which obviously is a risk-on fund, looks pretty good. Even the old IBD 50 index, which has been lagging. And, it's not a perfect measure, but you can see it's been kind of all of a sudden short-term change in character anyway. So that's good. We'll see how it goes going from there. Just running through a couple things that we usually do. Here's XLP. Still no bounce in XLP, which I take heart in. So when there is rotation, when AI or whatever, growth stocks get hit or whatever, they're rotating into other stuff that might be cyclical, but they're not rotating into toothpaste and toilet paper, you know what I mean? They're rotating into other sorts of chip stocks or whatever, which I do take heart in. Of course, some of the big news this week, not a news guy, but the interest rates have really taken a tumble. And it just seems like this week, for better or worse now, because the market is based on expectations. But this week, it really seems like a lot of rate cuts were being, I don't mean fully priced in, but now the market really expects not just a rate cut next week, but, 3 or 4 more, okay? And we've seen interest rates, this is the 10-year Treasury note, really come off here from, say, 4.30 to 4 within just a couple of weeks. We're bouncing as I record this today. Some people say it could be a recession trade. Hey, what if it's a recession? Anything's possible, but over time, I know, a big drop, if we continue to see this in interest rates, there's actually an indicator that we've read where we won't get into it now, but if it happens, we'll flag it for you. But, if interest rates really come down, it's a positive for stocks. So we'll see how it plays out, but so far, so good. Before we get into individual name, or at least, buy names, my thing is just remember to keep your feet on the ground. And if you do have a winner, like I said at the outset, a lot of what's going on here is entry points, position sizing, portfolio management. It's not just like, oh, I own this stock and it went up. Some of them are like that. But this is Bloom Energy. The thing broke out. We had it in top 10. It broke out at 30 in late July and got almost to 70 this week. It's pulling back a little bit today. It looks totally fine. I'm not telling you how to handle it. There's no one perfect way to handle it. But, if you have something like this, make sure you're raising your stop. Maybe take some partial profits. Maybe take the profit altogether if it's something you don't have a lot of conviction in per se. Full disclosure, we sold our position here and took a big profit in top 10 today. But, that's not a prediction of where the stock goes. But the point is, trail some of these things. The other name is like gold stocks. I mean, now I'm not saying, Mike, can't they keep going because we're running deficit? Yeah, of course. I mean, gold could keep going for another year. But you just have a lot of names that, they've been, running for a while. This is Kinross Gold, but you could look at almost any gold stock. They've been running for a while. Then they kind of have accelerated higher. They're a few weeks into their run. Maybe book a few profits here or there or raise your stop or however you want to handle it. Okay, I'm not saying this is going on all over the place, but, when you do catch a winner, especially in this environment where so many stocks are, 3 steps forward, 2 steps back, or 2 steps forward, 2 steps back, try to book some profits, raise your stop, make sure, you're trying to handle it correctly, okay? In terms of stocks that we're watching, okay? So this is Micron Technology. All of a sudden, there seems to be this huge there has been a move in sort of storage, okay? So it started with Seagate and Western Digital. We've talked about these a bunch, and they've had runs. Again, short term, just looking at Seagate, just off the top of my head, 200 round number resistance. It's had a pretty big run here, so we'll see what happens. We mentioned Pure Storage, okay, with this huge gap out of this big base a couple weeks ago. You can see that big, and it's handled itself pretty well so far, not setting the world on fire. And now all of a sudden you have something like a SanDisk, which broke out a few days ago and has just gone ballistic. And Micron Technology, it just seems like there's this huge shortage of chips. So near term, what I would say about something like Micron, which was the name I was flagging, was this is kind of a first stage base or launching pad, call it. Okay, so it breaks out this week and it's extended. So we'll see what happens. But usually it could. I mean, if the market tanks, all bets are off, right? But usually when you see this sort of thing out of an initial base, this isn't like a top right here. This is sort of the initial move. So, just keep an eye on some of these things. I wouldn't say chasing them here, given the environment probably doesn't work. Who knows? But just keep an eye on something like MU. Maybe it goes higher and then pulls back and it provides some sort of entry point. But either way, MU is sort of a cyclical chip name where earnings can go way, way up and way, way down. It looks like AI and all that might push earnings way, way up, and the market's starting to discount that. So that's a name to keep an eye on. Still in the chip space, Taiwan Semi, totally different animal, of course, but just kind of a, here's your correction, which kind of, undercut lows, came back, and then like a lot of stocks here, it's spent the last couple of months kind of consolidate, even though the market's grinding higher, the indexes are grinding higher, a lot of stocks have just been doing this sort of thing, but did nothing wrong, just kind of consolidated here, and now it's sort of changing character to the upside, RP peak, price peak, so we'll see how that goes. Looks pretty good. We mentioned MongoDB, just kind of an update. I'm intrigued how you had these two big volume days. Usually, obviously with an earnings gap, you're going to get one by definition. And then to have that second day sort of huge volume and peak close. And then since then, it really hasn't been able to pull back much. Now, maybe we come in on Monday and it falls 50 points or whatever. But, you always got to go with what's in front of you. And so far it looks, pretty good in here. There is some old overhead to contend with, but that's interesting. Amphenol, this one intrigues me because it's like the market. It's extended. I don't say extended, but it's had time-wise, it's had an extended run. It's been running since April without any real pullback. But you also just had this many weeks in a row of very, very tight, not just tight closes, but tight trading. You kind of have to look in as a tight sort of thing. And then it popped this week on good volume, to new highs here, theoretically sort of continuing the trend, okay? So APH is one that's been in top 10 recently. It's not, the initial kickoff point to the race, obviously. That would probably have been back here. But certainly it looks like a potential extra secondary entry point, if you will. The 50-day line's not that far away, so kind of intriguing. Cameco, this is kind of interesting. Like I sort of wrote this off. It just had a lot of weird action. I guess, let me go to the daily chart. It kind of got hit, had some volume, broke the 50-day line, then came back, but then a big reversal on volume. So I'm still kind of like looking at that like, okay, there's been some institutions that are selling this thing up around $80, right? But that said, the stock is just kind of hanging in there, and kind of like Taiwan Semi we just looked at, you have this big persistent run to new high, clearly to new highs, right? I mean, not close. And then it's just kind of hung out here. When you look at the weekly chart, they're really, even though you see those volume spikes on the daily, you really haven't seen it here on the weekly. And it's just been kind of chilling out sideways. So if this could resume, it could be a nice, it's got great sales and earnings growth, liquidity, $34 billion market cap, decent size. So it could be sort of an institutional play for the uranium trade. Service Titan. This is a name I think I flagged back here when it broke out of an IPO base and then it faltered. But you kind of now have this big base on a potential base, reacted well to earnings here. Oh, geez, last week I think you have sort of a little volume cluster here, 3 days. I'm not giving you levels. Here's a level, here's a level. Who knows how you want to play it. Software, not really the best place to be, but that can always change. So just something that I'm kind of keeping on my back burner watch list. Morgan Stanley, I'm just mentioning Morgan Stanley here. You can kind of see, again, 50-day, 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 almost the 50-day there, accelerating higher. Goldman Sachs, same sort of thing. Basically made no net progress here, like so many stocks, even though the market's been grinding higher. So many stocks really made no net progress here for 2 months, ballpark. Hit the 50-day line, and now it's kind of racing higher on some volume. We'll see how it goes. I think I've said that a lot today. We'll see how everything goes here the next few weeks, but certainly a good sign to see stuff like that acting well. Old friend ARGX, I think I mentioned this last week, but does look good. Kind of had this, multiple support in here, ramped on earnings. It's probably easier to see on the daily chart. Multiple support, ramped on earnings, had sort of the post earnings, which we've seen a lot here. We've seen a lot of gaps and then not totally crapped out, but like really pulled back, and it's like, oh boy, this doesn't look too good. But then obviously it's kind of cleared out to new highs here. It looks pretty good. ARGX does. Xometry, I think that's how you pronounce it. XMTR. This one's thinner, just FYI. It's been in top 10. And you can see obviously for years it's just been, up, down. But definitely a change in character here. This volume clue was significant, and obviously it's acted well since then. It's choppy, and maybe 50 has been kind of sticky in here, round number resistance, so we'll see what happens. But it looks pretty interesting to me as the 25-day line has caught up. Rocket companies, I think we advise taking some partial profits here in top 10 as well this week. But the point is you do have, this move into, it looks like the Fed's going to be cutting rates, and the Fed rate cuts does help the stock market as a whole and a lot of these individual groups. I do like how the stock started to wake up a month ago after earnings and then had a shakeout to the 10-week line. Yes, there's some churning this week, which we need to watch, but overall, kind of an interesting idea. And it's a good story too. It's not just, they've made some acquisitions that should kind of make them even more powerful going forward. Just a couple more. Uber, which has been just, again, this was very odd. It kind of came out of nowhere, or shot out of a cannon, I should say, after the lows, hit a new high. What's it done since? It's just grinding sideways. But you can see on the weekly chart, very, there's no selling. It's not like it's getting whopped. It's had a huge run. It's under distribution. It just can't get going. And you just feel like at some point, maybe this thing finally confirms on the upside. The RP line relative to the market is lagging, but I do keep it on my back burner watch list because the numbers are good. The fears are out there about robo-taxi, and they could be totally legitimate, and maybe that's going to keep a cap on the stock overall. You know what I mean? But I don't know. The business is pretty good. There's a lot of free cash flow, so on and so forth, okay? And last but not least, just kind of more on the cyclical side of things. Airlines are a mixed bag, but this is United Airlines, UAL, looks like the leader. Fell off a cliff here, kind of came back, was sort of slopping around. But this right here, this week right here, if you can see it, that changed character. And it's just been kind of, not to keep saying that word, grinding higher. Sometimes we call this a chain. It's like a chain link. It just kind of keeps going week by week. And it's up here testing, new highs or whatever. So just flagging that for you, especially if you get some rate cuts. Oil prices are down. The earnings and sales for all these airlines are gigantic. At some point, they're going to pay down enough debt where they can start returning some of that cash, but we'll see how it goes. Either way, UAL acts well. So back to the market, it's kind of the same. I don't want to come in here and say the same thing because there are different names. And I will say, like I said, growth stocks did pick up this week. We saw that with some of the growth indexes. But when you dig down to individual stocks, again, it's like if you have a 10-stock portfolio, you might have a couple of zingers. You might have 3 that look, really good. You might have a few others that are okay, but then you have 3 or 4 that are, used to look good, but now they've fallen apart or got really hit on some news or rotation. So it's just kind of tricky out there. So just make sure you're watching your entry points, position size, being a little bit more discerning on the buy side, having a little bit of cash, mainly for opportunities. Maybe we do shake out here in late September, and some of these things pull into the 50-day line, provides an opportunity to buy, with a reasonable stop in place if it doesn't work. So it's just that kind of environment. If it changes, if we get all of a sudden software stocks and retail stocks and brokerages and all this stuff kick into gear, I'll be right there. But right now, at least on the growth side of things, it's still a little bit tricky out there. So by all means, look for opportunities, but do so prudently and be a little bit discerning on the buy side. Okay, that's all the time I have for today. Thanks for watching. As always, be sure to come by again next week for another Cabot Weekly Review.